talking about ultra clean holdings today, UCCT on the NASDAQ. Earnings come out tomorrow, so this is Monday, April 27th. So they come out on Tuesday, April 28th, after the bell. So I'm usually an after earnings guy, and most analysts are. You want to get the earnings and analyze it and say what you should do. But I'm going to say in this particular case, I think you should get in before the earnings. Now, no, we're not giving you a ton of notice here, but if you have an opportunity to see this video and to do a little bit of digging after this, I think it's a good time. Shares got as high as $65. They're now trading about 55. And they came off when the company announced they were issuing new shares. That happens all the time. I think it's kind of silly, to be honest with you. Company decides, they need more cash. They decide to issue shares. Maybe they have a big project. A million reasons to issue shares. In this case, the company's doing well. They have tons of cash, but they're growing, so they might need even more than they already have. That's fine. I'm okay with that. That means they're being successful. And the first thing a lot of people think about is dilution, and they sell the shares, and that's fine. They can do that. I don't think it's a good idea. Company's been doing really well. Let's get a little bit into what they do. It's called Ultra Clean Holdings. It's a great name for this, but it's very high tech. It's high tech cleaning for semiconductors. These things need to be cleaned down to nanometers, right? Like, you can't have anything wrong, or the chips are just not effective. So their customers, their two biggest customers, are Lam Research and Applied Materials. So this is a bit of a supply chain thing. Ultra Clean supplies Lam and Applied Materials. Applied Materials then supplies to the NVIDIAs and Intels and the actual semiconductor maker. So these guys are providing like the ultra clean products that you need to make a silicone wafer and to make it down, like I said, super clean. The Lams and the Applied Materials and the KLACs of the world, they have equipment that makes semiconductors. And these are really expensive machines that supply, like I said, NVIDIA, Intel, those kinds of guys. So it's a bit of a supply chain. This is kind of at the beginning of the supply chain. Still very technical. Really makes semiconductors possible. All right, let's take a look at our model. We always like to do that. And here's the financial kind of view. And you see the company's had a pretty good history, a little bit up and down. We had some good returns back in the early 2000s. Petered out in 2008, 2009. Lots did. Roared right back. Peaked out again in 2017. Came off 2018, 2019. That was kind of the 4G, now into the 5G. And before the transition to 5G is a bit of a lull. And now you see back up again, 21% return on invested capital. Awesome. This is our default valuation, trading at trading at 55. Default says 74. I actually think it can be higher than that, but it's nice to know that our conservative default model is actually saying it should be worth more. Awesome. So another way to look at it is EBITDA multiple. That's usually my favorite multiple. I don't really like PE multiples. I think they distort things quite a bit. 15 times is very reasonable. They're in an up period. They're in an up cycle. It's in a good space. 5Gs we know is rolling out. We know there's shortages in chip space. This would benefit from that. They're making these things as fast as they can. There's a lot of good things here. So look, shares went up 65, came down on new share issue. I wanted to mention that Lam has already beat earnings. This is one of the biggest customer is Applied Materials. The second biggest is Lam. Applied's coming out later, but Lam's already beat. I see no reason why they shouldn't beat. Doesn't necessarily mean the stock will go up, but look, who knows? The reactions are always pretty wild. But I do think they're going to post a really good quarter, whether it's a outright beat or not. We know it's going to be up year over year. We know it's going to be a pretty good quarter, and I'm a buyer almost regardless of what happens. But especially if they beat and the shares come down a little bit, I'd definitely be a buyer. I think in this case, it's going to be good enough that you can get in beforehand, especially given the pullback we've had recently.